Hi there, welcome to Kneppy Invest. A bit of a spur on the moment video. I wasn't planning this at all. However, when I went to Market Index to gaze at the top performing companies on the ASX today, which is the 5th of March 2024, I noticed that a company called Paragon Care was the best performing company on the ASX, share price up 41.5%. And I didn't remember the company releasing any announcements before trading began. And they didn't, but they did release a really important announcement just after trading began at 10 a.m. this morning. And that's the reason why the share price of this company rose a significant amount. Turnover, $2.1 million. And the markup of this company right now is just under $200 million after this nice little rise. Now, Paragon Care is a profitable company. I even think they also give their shareholders dividends. And the only reason I really know this company is because I traded Paragon Care back in 2014. It was a successful trade, and that's the only reason I know this company. They're in the healthcare industry. They sell stuff, equipment, stuff like that. That's what I'm assuming, if I can remember right now. But I just thought, on the back of the share price rising by a significant amount, and not only that, the share price possibly breaking out. Here is their chart. Share price was in a downtrend over the past year or so. It looked like the downtrend had been trying to come to an end, and today the share price has broken out at 29 cents. This is the highest the share price has been for this company since April of 2023. So we're almost at a one-year high for this company's shares. And the other thing I should mention out is pretty big volume coming through today. So the market excited about Paragon Care. So what caused this excitement in this company? And am I willing to trade Paragon Care because it's just broken out? Now, if I'm willing to trade this company, maybe I should not have a look at the announcement. But on the other hand, I'm more comfortable, or probably the best way to say it, I would have more conviction in trading this potential breakout, and I'm almost leading towards saying this is a breakout, if this share price rise was on the back of positive financial news. And that's where we get to the announcement today that was released by Paragon Care. Was this a positive financial announcement from the company? Now, let's see what you think. Okay. In fact, I've actually brought up the announcement and also the company's half-year results because I also wanted to have a look at the company's financial state. But I'm getting a little bit ahead of myself right now. Here is the announcement that caused a little bit of excitement in the company today. Proposed Paragon Care and CH2 merger. I have never heard of CH2. In fact, this company is a private company. So this is, in a way, possibly a reverse takeover, or maybe it is a 50-50 merger. And to be honest with you, the only true merger is when it's 50-50. Anything else is not a true merger or merging of companies. So let's have a look at this investor presentation because this is all we really got from the company. And what really intrigued me was this first little page here. Well, this was the start of me being intrigued. Combined company, or this merged entity, will have revenue of $3.3 billion. Now, let's go to have a look at Paragon Care's just his cash receipts in the last half year. It was only $173 million. And the revenue was, we can have a look right here, their revenue, keep going up. Revenue was about 160 million. So that's half a year. So we could say maybe $300 million of revenue in a full year, which means this CH2 has about $3 billion of revenue. That seems a huge amount of revenue. But the other thing that intrigued me here was, even though the company had $3.3 billion of revenue, and this is the combined merged company, EBITDA would only be 93 million, which means this company would be existing on really low margins. In fact, even lower margins than Paragon Care. 1,300 staff, 1,100 suppliers. Proposed merger, you can go through this. Here it is. They're talking about the revenue and EBITDA. Talking about synergies. I really hate the word synergies, by the way. I've actually used the word synergy on one or two occasions, but I just hate it when anyone or management use the word synergies. Um, Key terms of the merger. So this is where it does become a little bit intriguing, because we want to know what this merged entity would be valued at. And we get some sort of understanding of that just in this particular page, particularly around the consideration. Paragon Care will acquire all of the issued share capital in CH2 in exchange for issuing approximately 943.5 million shares in Paragon Care. The proposed issue of shares implies a purchase price of $201.5 million, assuming a share price of 21.4 cents. And the share price of Paragon Care now is a little bit more than that, and represents 57% of Paragon Care's issued share post the merger completing. So CH2 will be the bigger of these two companies, which makes sense because they're bringing in a significant amount more revenue. Management, this might be also important. I don't know any management of Paragon Care. Post completion, the Paragon Care board will comprise of 3 new directors, and more than likely they're involved with CH2. Additional 2 independent directors, John Walstab to remain on the board, David Collins, current CEO of CH2, to be appointed as Group Managing Director and Chief Executive Officer, which also probably hints that CH2 is the more powerful of these 2 companies. So possibly we'll also see eventually a name change from Paragon Care to CH2. The merger is expected to complete in late May 2024. International reach. So we're talking about Southeast Asia, Japan, South Korea, and also Australia. It's a much bigger company. And I'm not sure how much of that is Paragon Care and how much of this is CH2. Maybe both companies have interests around all these areas. Maybe they're just combining. Who knows? I don't know. Combined market potential, aged care, talking about all their different sort of segments. Talking about the sort of the total addressable market, which is like $190 billion, is as if they're ever going to get near that, although they've got $3.3 billion of revenue right now. Combined financial strength and synergies, that word again. 24 distribution centers. I'm looking for, and they say expected annual synergies of more than $5 million per annum. So I'm searching for some numbers here. Merger rationale. This is very important. Why are we merging, or why are they merging? Probably talking about synergies a lot here. We do. It's financial. Actually, no, talking about how they do. EBITDA synergies of $5 million per annum. Transaction is expected to be earnings per share accretive in financial year 25. That remains to be seen. I've seen many companies say that in regards to acquisitions or mergers, and they never do. A lot of stuff here. Talking about growth down the bottom. So I'm still searching for some good numbers. Combined financials, this is where it becomes more interesting. Okay, so Paragon Care, $328 million of revenue. CH2, almost $3 billion. And this is where it becomes interesting right here. So Paragon Care was the much more efficient company based off EBITDA margins. So EBITDA of Paragon Care was 39.1 million, but CH2 was 53.7 million. So just look at the EBITDA margins for both of these companies, and then the combined EBITDA margins are going to be significantly lower than Paragon Care, but a little bit higher for CH2. And combined profit of $30.5 million. Number of shares, 1.655 billion shares, which means at a share price of 29 cents. Why did I think it was 40 cents? Oh, because share price went up 40 cents, 40%, I mean. So at 30 cents, we'll just do some really quick maths here. At 30 cents, the markup of this company would be about $500 million, which means the company will be trading on a P ratio of almost 20. And that is a little bit stretched, maybe. They also have a little bit of debt, according to this, total debt of 210 million, cash of 33 million, so net debt of 177 million. So enterprise value of this company, a share price of 29 cents, would be roughly almost $700 million, and EBITDA 92.8. Okay, so straight away, what I'm thinking or looking for here is any sign of value. Now, obviously, the market likes this merger, and at this point in time, I'm not seeing massive amount of value. However, I have no idea how much CH2 has been growing. Maybe CH2 is a really good growth company. I'm pretty sure Paragon Care is not, and that's just based off some little things I looked at here. So this is Paragon Care's. In fact, I'll just put in revenue here. Paragon Care's revenue has barely budged over the past 5 years. It did grow in the past year, but this company has also been quite accretive, not accretive, acquisitive in the past. And that's one of the reasons I really stopped following this company. They were too acquisition friendly. So I want to see if there's any sign of CH2 growth in the past. Is this company growing at all? Okay, pro forma balance sheet. Total equity of the, well, this is interesting. Total equity of Paragon was 251 million. The equity of CH2 was only 22.2 million. And the reason why is intangibles. Intangibles in Paragon Care, because they've made so many acquisitions, 260 million, which means this company, Paragon Care, had negative net tangible assets. And same is true for CH2, because their intangibles was higher than their total equity. So the combined equity of the company would be $452.5 million, of which 482 million is intangibles. Okay, let's have a look. What else is here? Oh, this is where it gets interesting. CH2 overview. I have no idea what this company does. Okay, CH2 is Australia's leading national integrated pharmaceutical, nutritional, medicinal, or medical consumables and complementary medicines provider. Okay, sort of understand what maybe they do, but there's still not a lot of stuff there. Distribution leader in the Australian healthcare market, providing tailored solutions in leveraging their company's comprehensive range with a strong combination of quality service and price. Just still doesn't tell me what they sell. Do they sell equipment? Something like that? I don't know. All right. So at this point in time, I don't really care what CH2 do. I'm looking at this. What I'm looking at here is the financial performance of CH2 over the past 3 years and their forecast numbers for financial year 24. And this company is growing. In fact, they've grown their revenue from 1.6 billion in 2021 to a forecast revenue of $3 billion. So that $3 billion mentioned in this acquisition or this merger was their forecast revenue for 2024. If they use actual revenue numbers for 2023, it was only 2.2 billion, but really good growth, 35.6% growth expected in this current financial year, and compound annual growth rate over the last 4 years, including these forecast numbers, 22.4% per year. EBITDA growing at 30.8% per year, EBIT at 50% per year. Regions, so revenue breakdown, hospitals, actually no, non-acute, try to see the colors here, non-acute 45.5%, retail 45.5%, hospital, no, non-acute is 9.1%, hospital 45.5%, retail 45.5%, and regions, looks like mostly Australia there. I thought I was talking about international as well, but if you add all these regions up, that's almost 100%, if not 100%. So mostly just Australia, I would assume. Talking about the board, I don't care about the management. 85-year heritage, I don't care about the history. It is history. Business model and portfolio. Okay. Anything else here? Just talking about. And here we have Paragon Care's financial performance. And I do have one red flag when it comes to this company. I'll show you in a second. I did have a look at their financial numbers for the last half year, and there was one significant red flag. Asia Pacific reach. I don't know where this comes from. And tier one distribution partnerships. So we sort of got an idea what they might be selling here. So mobile MRIs, ultrasounds with Samsung, DRX rays, Carestream, PET CT and MRIs with United Imaging, CyberKnife. What the hell is a CyberKnife? And tomotherapy with Accurate. So this gives me a better idea what they're doing here, or what they're selling or distributing, I suppose. Divisional breakdown. Okay, we're getting to the point where I might actually go past this particular presentation and have a look at Paragon Care's most recent half-year results. So I've already had a quick look at the profit and loss statement. Only had profit of about $3 million. However, that's distorted because for some reason, if you have a look at income tax, was it income tax expense? There was something that was pretty big here. Business restructure cost, $2.1 billion. Yeah, anyway, the main red flag I did see was in the income, not the income statement, the what do you call it? The cash flow statement. Okay, so really nice receipts of customers, $173 million receipts of customers. I suppose as a distributor, they're going to have low margins. And you can see that with the gross profit. I'm pretty sure, do they have a gross profit in the profit and loss statement? Let me have a look. Gross margins, yeah, fairly low gross margins. Yeah, gross margins. 66 divided by 159, about 40% or something like that, 35, 40%. But they also spent a fair bit of money on employees, $33.8 million on just employees. So they do hire or have a lot of staff. So you take that gross profit and minus employees. This company is existing on fairly low margins. The one red flag I was looking at when I was viewing the cash flow statement was just the simple fact they had $10.8 million in operating cash flow. Last year it was only $1.2 million. But this year they spent $21 million on property, plant, and equipment, which is capital expenditure. So Paragon Care was actually free cash flow negative by over $10 million. And to fund that, they actually did increase their debt by about $25.2 million. That is actually a small red flag I do have. And one of the things I did go is have a look at their history. Now, I am a subscriber to Ticker, and also now I'm a subscriber to FinChat over Guru Focus. I've changed my allegiances there simply because of the cost. I can get every single company in the world through FinChat, not through Guru Focus, and spending a lot less through FinChat as well. Not as enamored with what I can do in FinChat. However, there's some really interesting things I can do in FinChat that I can't do in Guru Focus, but this video is not on FinChat. So what I did in both Ticker and FinChat is I wanted to look at the operating cash flow and capital expenditure of the company over the past 10 years. And for some reason, this company has just exploded the capital expenditure in the last year and a half or so. And you can see this through FinChat. So what I've done here is I'm having a look at the last 10 years plus the trailing 12 months. So this is having a look at last year plus, well, it's actually looking at the last 12 months. So the last half of last year and the first half of this year. So last year, this company was free cash flow negative by about $3 million. And that's continued into this half year. So probably my big question is, why is Paragon Care all of a sudden spending a lot of money on property, plant, and equipment? That would be my number one question if I was keen on this particular merger between Paragon Care and CH2. Now, more than likely, in these sort of situations, and it's going to be fairly similar to what I do with IPO. So I tend to wait at least 6 months before I become interested in an IPO, unless the company releases a profit upgrade. And if a company releases profit upgrade, all bets are off, and I'm willing to take a position in that company. So more than likely, what I'd probably do with this merger is wait at least 6 months, wait to August or maybe even this time next year, just to see how the merged company is performing financially. Because I do have questions about Paragon Care. I am impressed by the growth in CH2 over the past 4 years. Whether they can continue that, I don't know. Whether the company can reach all these synergies, they mentioned the word synergies about 5,000 times, is questions I have, because again, I'm a little bit skeptical when companies put that word into any of their announcements. So many questions I do have moving forward. And probably the most important one is just the valuation. So the markup at current share price, 29 cents, would be around $500 million. Company also has a little bit of debt, which means enterprise value of the combined company will be $700 million. On profit of about $30 million, that's probably saying to me, or suggesting to me, not quite now. I don't quite see value in this company. If I saw a lot of value, I would be all in, maybe not all in, but I would be more interested in this particular merger. So really, that's all I have for this particular video. Now, one thing I could do, so I'm going to say I'm not interested in the merger, not interested in the new merged company, but what I could do is just trade the chart. This is a breakout, and I have said in the last week or so that sometimes I should leave my biases away from my trading. Leave my emotions aside. So I am analyzing this particular merger and saying, well, maybe no value, but the market could think differently. And the market is thinking differently just based off the trading today. Share price has broken out. Share price is almost at a one-year high. The market likes this merger. It doesn't mean the market's going to be right. And maybe this is a trade moving forward. So that's all I have for this video today. Sort of an ad hoc video, not planned video, on the spur of the moment video. I wasn't going to do this video just before I did it. In fact, I already prepared another video, put that into YouTube. I'll actually send that video away tomorrow on the 6th of March. And if you have any questions, any thoughts, just leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.